Hello, I am Jim Schaefer, a California family law forensic accountant. Prior to becoming a family law forensic accountant, I was a senior tax manager for KPMG in Los Angeles and New York City. I earned my master's degree in taxation from Golden Gate. As they say in the movies, let's cut to the chase with an example. The marital estate includes 20 shares of XYZ stock. 10 shares were purchased at a cost of $10 per share. I will refer to these shares as lot number 1. A second lot was purchased for $80 per share. The parties have agreed to divide in kind. Does it make a difference in how the lots are allocated between the parties? For illustration, we will look at just 2 allocation possibilities and the typical income tax implications for each possibility. In example 1, we will examine the income tax effects of Wanda taking 1/2 of each lot. In this example, Wanda and Herbert are divorcing and are dividing their 10 shares of XYZ. They divide by lot, so each receive 5 shares with a cost for gain or loss of $10 plus 5 shares with a cost of $80. The resulting capital gain for Wanda is $550. Wanda pays tax on $550. Let's move on to example 2. Wanda and Herbert divided the XYZ shares. Wanda took the old shares with a low cost. Wanda sells her 10 shares for $1,000. Her cost is $10 per share, so she subtracts $100 from her sales proceeds to arrive at a capital gain to pay taxes on of $900. Let's review. If Wanda divides the XYZ shares by lot, she pays income taxes on $550 when she sells her shares. Or, if she is not paying attention and takes the low-cost shares, she has a taxable gain of $900. In most cases, Wanda is going to want to lower her taxes and pay income taxes on $550. I have 2 suggestions. Number 1. Call the brokerage house that holds the shares and inquire about the mechanics of dividing each lot between the parties equally. Number 2. Carefully word the settlement agreement or decision to achieve the fair division that Wanda is seeking. Next, let's hear comments from our focus group.
I have a comment. Based upon case law, unless the tax implications are immediate and specific, a court cannot take them into account.
I too have a comment. In negotiations between the parties can include the tax implications in their plan for dividing the shares, if that makes a difference to them. Counsel have to consider how the tax factors relate to the overall division of the estate. It could be that the shares are not divided equally between the parties, but one spouse gets them all or the majority. This kind of division can be useful to help equalize the overall division of the community estate.
My comment is this. The gathering of additional facts can be helpful. For example, what are the characteristics of these shares? Are they a quick turnaround for quick gain? How long have the shares been held, short-term or long-term capital gains? Which spouse is the more risk-adverse?
I hope you enjoyed this short message. If you have a suggested topic for a future presentation, please let me know.